This?
Yeah, the penal clause, exactly like what if the management is not maintaining the audit trail and you have issued a modified report? Yeah, is there any penal clause? Like, I think so there was one slide, section 450 or something?
So section 450, yeah, as far as fine is concerned, you are talking.
Yeah.
See, the fine quantification is not that much material. That reporting is, giving a modified reporting is more material to that. And because the section 450 fine is hardly, I think, that 10,000 rupees and 1,000 rupees per day till the default continues.
But don't you think for all the small companies there will always be some of the other aspects, and any CA will create a modified report by default for smaller companies?
For smaller companies, even a tally has an edit log facility nowadays.
See, that's fine. When you mention the details of user ID as such, Tally doesn't have the feature of user ID. There are 3 accountants sitting at the client's place, or somebody from my office or any other office is going there and doing some part of the accounting as well.
Periodic backup. Previously there was a saying that the periodic backup is there. People do it on a yearly basis, some do it on a quarterly basis. But now every daily backup company has to maintain it, and this is a responsibility of the management. Because a lot of time, due to the data has been maintained on the cloud server, or you can say that global server, they have to keep a local server in which the entire data has to be stored. An auditor has to comment on it as well. So these are the regulatory requirements. Rule 3.1 is from the company perspective. Rule 11G is from the auditor's perspective. As we talk about company perspective, it is the duty of the company to select the right accounting software which records an audit trail of each and every transaction, first and foremost. Second is which creates an edit log of each change which is made in the books of accounts. Any change means you can say that all the 3 W's: when, what, who. When the transaction is changed, who has authorized that change, and what the amount has been changed. Company would need to ensure that the audit trail is not disabled. The most important part is it should not be disabled even for a period of 10 minutes. It has to be maintained throughout the year. So Rule 3.1 is applicable from 1st April 2023 while auditor reporting starts applicable from 1st April 2022. But because of the interplay between both those rules, so the actual reporting starts from 1st April 2023 onwards, which is applicable to all the companies. There is no, you can say that distinction made between a small company. Throughout any company, even a Section 8 company is covered under this. But sooner or later, when the reporting evolves, I think the LLP will also be covered as a part of it. So this is what a typical reporting whenever, basically in case the accounting rules, the software rules is applicable from 1st April 2023, while the auditor remark applicable from 2022. So as far as 22-23 reporting is concerned, you can put this general clause as far as reporting is concerned. Scope of implementation guide, even the ICI guidance note provide only the principle-based guidance towards that. As far as the factual reporting, as I said, is concerned, you have to apply your professional wisdom. Also, you can use the work of another auditor, SS 620, which states that always, whenever, because audit trail is more from an IT point of view. You have a certain background of IT knowledge. So, in case if you are not